Well, good morning, everybody. A little bit different intro music today because we have different vibes. Today, coming into this live session, we're going to be talking about this situation in Ukraine today, which is hardly something that we all want to be talking about. But we're going to first take a moment here to reflect on a few things that I think are more important than investing in our portfolios. And I would encourage you all as we go through today to just stop and think about what good things you have in life. People in Ukraine right now, seeing pictures this morning, look pretty terrible. So perhaps take a minute to disconnect, go outside, enjoy the fact that you don't have to, probably where you're at, hopefully you're not in Ukraine or the affected areas, but take a moment to just look and outside and appreciate that probably have a fairly quiet and calm environment. But other than that, also think about friends and family, people you might want to reach out to. Life is precious; things can change quickly. So this is kind of what I'm reflecting on here this morning as we think about the markets. I'm not really in a mood to be too focused on portfolios or crypto markets or anything else. It's just a good time for those of us who are not directly impacted to reflect on what we do have, perhaps, and maybe that'll give us some perspective as we go into this. I do want to say that every time I go live, I seem to have more technology broken. I've got to find new live streaming software. This is very first world problems I'm going to complain about, but I have no idea. Hey, there's my webcam. It's working now. I have no idea why my software keeps acting up, but I can't get the chats up anymore. I was trying to work on this for a little bit before I went live this morning. Just nothing's working. I just did an update. So we're just going to have to just do, and I've got this on the wrong screen and everything else, but first world problems, like I said. All right, let's take a look at what's going on broad markets. Obviously, we had a big sell-off on the news that Russia was invading. Yesterday was straight down. Futures overnight on equities. Thanks, Philly D. I wish I could put these comments up on the screen here. I had this problem before and I fixed it once before, but whatever. So what I was looking at here before, I did highlight this yesterday. I said in our Discord chat, anyway, we were talking about this. I don't know if I put any of this on Twitter. I lose track of what I post where. I post kind of aggregation of thoughts on Twitter, but I chat a lot more in Discord. But yeah, the momentum was obviously the downside coming in here, and it looked to me like we had a retest and resumption down, more or less, a rejection of your 200-day moving average right there. So that's not looking too great. The question is where do we find a bottom? And I've been looking into all these different weekly supports. We've got a couple of them here coming up where we had a bit of a bearish momentum and then a change in direction here. So I'm looking at these levels to tell us, hey, we might be, where the bottom in equities might end up being roughly around. No, we won't know until we get a bounce back in the other direction here. You'll see I have this long-term downtrend. It's kind of monitoring that for the first sign of momentum changing back from the sell-off. Now, the one thing I would be cautious if you're out there, if you've got equities accounts, or let's look at Bitcoin here. Bitcoin sold off. I had a target. This is a different chart that I use on my my market-wide view. This is a Bybit chart here. I keep it fairly simple so that I don't have a bunch of distraction. I'm looking at the chart. But this is that monthly level we're looking at to see if that holds. Now, of course, it can wick down below that. We're really wanting that to hold on a monthly closing basis and maybe get a positive bounce through next month. But we have 4 pretty drastically down candles here, and we're going to look at that in a little bit and see what kind of precedence there is for that. But as of right now, you see the really short-term price action. I expected us to come back into about this $35,000 area whenever we started to roll over. So this was my hint that something was afoot. We broke through the 50, came back to test the 50, made a higher low, and as soon as we rolled over here, it's that 12-hour candle right there, I started really, we'll use the term trimming. It's for Lemmy. Lemmy gives me a hard time about using the word trimming. It started aggressively trimming all through here as we rolled over. When we lost that 50-day moving average, this is basically a failed breakout, and you see this little pattern here. We had a bit of a trap move. A little bit of a higher low put in, but then a lower high, and then it rolled over, and that's bad news bears. So then we've been down ever since then. So since that point, I was looking at 35,000. Now, given world events, wicks below on any sort of more negative news, wicks below this or capitulation below this is definitely possible. The one thing that I would caution anybody to, and it's not financial advice. I should probably started with that. Let's go to this one here. Anything that you hear me talk about here today is just my opinion about what I'm seeing in the markets. This is not financial advice. I'm not a licensed financial advisor. If you were to take trades blindly based on anything you hear me talk about today, you'll end up losing all your money and living in a van by the river. Now, all that said, when I look at, is this yet a different chart? What happened to my mark? I had some stuff marked up here. Really, we had talked about this before, right? I had this longer term trend line right through here. And when we lost that, so that was the other part of it too, is this little move. Another big part of what I was looking at. Yeah, that's really where I started really getting aggressive on getting sidelines-ish, is right around here, right? When we broke down this rollover through here, but it lost that trend line. So this is kind of looking like some resumption on the downside here. So it is my opinion that if we're in a bear market, and we're probably in a bit of a mini bear market, but it started right here when we lost this trend line. All right, that's really where any sort of bear market started. So if you're looking for a bear market, start your clocks right there as far as I'm concerned, right? That's where we entered kind of bear market territory, lost the 200. But given the propensity for these accumulation patterns and these Wyckoff patterns, this is still more my expectation, something that looks about like that. And you can kind of see, uncannily, we have the similar fingerprint. Now, we were looking at this fingerprint over here, but this support did not hold, right? This support did not hold. So when you have this sort of kind of fingerprint of this accumulation pattern, your selling climax right there, and then this trap move. When you have this failure here, this is where the market is testing the support to see if it wants to hold. And if it takes it down just below it, grabs some liquidity and bounces hard, then your accumulation is probably on the closer to being done. This did not hold. This fell through, and thus we got what was called, this ended up being what's called a redistribution, right? And then so the accumulation, I think, started. This was your preliminary selling over here, right? All this activity. And then this is probably your next selling climax to look at. So one of these days, we're going to get the actual accumulation. Let me just pull up something here to talk about how Wyckoff patterns work. Redistribution. All right. So you get the series of markdowns, right? You can have multiple markdown events, but eventually you enter a accumulation. The key differentiator between accumulation and redistribution is really in the volume profile. As you show this sign of weakness, as they call it here, as you break down here, you have a weak bounce, a low volume bounce somewhere in here, and if this volume continues to be low, then you're probably going to break down. When you break down, if all the volume is on the follow through on the downside, then that's obviously a clear indicator that you had redistribution versus accumulation. And really, it comes into play in the volume profile and these spikes down. If you're really high volume and a push back up, the bounce, what you want to watch is the volume on the bounce and the follow through. Here, clearly, we got some weak bounces and then it fell right through. But over here, so far, this first one was decent volume. If I go to the Binance chart, the point of all this, though, is are we in another accumulation pattern, or are these geopolitical issues going to cause us to break down further? And here's the next trend line I'll be watching, just for kind of some indication. So we're below the moving averages. Now, normally, when you drop below the 200 like this, obviously we're looking to fade most moves and be very cautious on most moves up. This dead cat bounce, we played it and then faded it pretty hard when it started to roll over, right? The other thing is separation. How far detached are you from the 200-day moving average? The further down you get, the more likely you are to bounce back up into it. We haven't retested the bottom side of the 200-day moving average, so this dead cat bounce might be might not be the only thing we end up getting. But this is the other trend line I'll be watching. You see here, I drew this, and it's kind of like a slight ascending wedge pattern. But if you take and clone that trend line down here, right, you got this broader uptrend pattern. So while we've broken down off of this trend line, you've got this area. So what I'm watching for closely right now is, do these geopolitical risks and then the sanctions that follow. So all the, but I want to make it clear, in my opinion, as far as the markets are concerned, the risk of an invasion by Russia was an unknown event, right? It was unknown to the markets what was going to happen with that. Now that it's happened, it is a known event. All right, so it's no longer an unknown. Markets hate uncertainty. So it's no longer an uncertainty, it's a certainty. Russia has attacked and invaded Ukraine. So what's sorry about that, guys. What's unknown is the impact of sanctions. How far will sanctions go? What will be the broader impact to different markets? I know Germany's really one that they're really concerned about, because if they shut down some of the pipelines carrying energy to Germany, Germany's already in kind of a precarious situation trying to shut down nuclear power plants. And, they have some energy issues that they're concerned with, things like that. Any sort of reverberations from sanctions will be the next few things that could cause some weakness in the market. But as of right now, this is a known event, and we should, in my opinion, be putting in a bottom of the next few days. We'll see how the news develops, but my guess is that the kind of full scale invasion that we saw last night with nighttime my time, early morning I think over there in that part of the world, but very heavy missile strikes taking out lots of strategic targets by the Russians. And then I saw pictures, haven't verified, supposedly Russian helicopters flying across Kyiv, which is the main city that we're watching to see, what happens with that stronghold there, but capital city. But I don't know if those might have been Ukrainian helicopters for all I know. I didn't really validate that. But as the news unfolds, point is, the next 48, 72 hours over the course of this weekend, probably the most drastic and shocking part of this has probably played out. Now, there's going to be on the ground, as I said in a post somewhere, it's probably going to be fairly terrible on the ground for a period of time, right, in that area. But as far as the markets are concerned, this is a known event now. We've moved from this unknown to this known quantity. And any subsequent news is just going to be further news about a war that's a known issue going on. What is going on outside my house? I've got all my neighbors' dogs going absolutely bananas. I can hear my dog getting super restless. So I don't know what's going on. Hopefully there's not more drama here. So, looking at the state of the market, I would expect that pretty much most markets are going to be putting in a bottom and or a top. So the risk off, assets, gold, silver, and then oil being the other one. Let's look at U.S. oil here. This is WTI crude, West Texas Intermediate crudes. This is not Brent. Let's go look at oilprice.com. Let's look at the Brent. So Brent is obviously the oil price from the UK, which is going to be higher because it's closer to the source of the issue. So Brent is up at 104 and West Texas Intermediate is at 98 today. Puts us a little over $100 on the oil front. My expectation here would be that oil will find a kind of a shorter term top in the next few coming days. Let's go to the weekly chart here. This big rise. I mean, we went from negative oil in April 2020 to $100 now. So most likely we're going to find some resistance, in and through these areas that we had here, right around $100. We'll see how long we get held up at $100, if it breaks through or not. This is going to be more damage on economies. The other component to think about as far as the markets go is, in my opinion, this gives the Federal Reserve the opportunity to calm down the rhetoric and not take as drastic of action as they probably would have otherwise. So you can maybe look for either less rate hikes or just a calming of the introduction of this rate. I would still expect rate hikes, but maybe instead of March out of the gate 0.5, maybe they go 0.25, right? And the market's kind of already priced that in. And then instead of 7 or 8 potential rate hikes this year, getting us to 2 to 2.5% by the end of the year, perhaps they just ease into it and get us to 1%, 1.5% by the end of the year. So that's kind of, I don't know. Obviously, the Federal Reserve, they have their own, things that they focus on. It's just my opinion about what I think might happen here. Interestingly enough, the dollar has just been consolidating in this kind of, I got a very broad term wedge here. If I go to like a really long term, we started to fall at the bottom. Getting some strength today, expected, risk off a flight to safety. That's fairly expected. The U.S. 10-year yield took a little bit of a haircut here this morning, but we'll see that. I was looking at that 1.9 level. And then, let's take a look at the biggest broad market indicator there is, being the S&P 500. You see here, these weekly levels. Yeah, we hit it. Okay. This level right here, watch for this weekly to become a big wick like these were. This is a pretty significant level. That is 41.50, right? So we had a couple of attempts with these big wicks. So big push up, market started to roll over in 2021, and then these got bought up real strongly. Bullish push, another attempt right at it, bounce, really strong bounce right off of that, and ever since then we've been above it. Now, of course, we can get below it. The next stop, I'm watching these weeklies. I'm not so thinking about the monthlies. I'm watching the weekly levels. That's what I care about right now. I don't really care about the monthlies too terribly much. But this feels like probably pretty close to a, interim bottom. What? Sorry, hitting the wrong button. Obviously, we've got these other levels here. I'd go down as far as, so, we'll just put, this is kind of a range here, 39. So 4K, I guess right on a 4K would be a good level to watch for some sort of a bounce here. But again, until we retake momentum, just look at this from a momentum perspective. I'm just putting some levels on here to watch for kind of how the markets react on a bounce off of these levels. These are not necessarily places I would look to blindly try to catch the falling knife. It's just areas to see what happens when you bounce off of this. But again, the momentum pretty drastically rolling over here. The other issue, though, when you analyze this, what makes it so difficult in analyzing is, why did that not pull up? Is this chart, right? You look at the money supply, and now the velocity. So there's not going to be a lot to take the sail out of the wind out of the sails of this expansion of money supply. Now, of course, money supply expansion is more than just the Federal Reserve printing. It is due to low interest rates and fractional reserve banking, where banks are able to take deposits and lend them out multiple times. That expands the monetary base. But when you put the fuel in the fire of money printing and low inflation, a very long-term low inflationary environment, low interest environment, the expansion of the monetary base just goes up very precipitously, as we see here. So this is what makes analyzing all of this so difficult, and this is what also makes me think that we really have a much higher floor than I think people think. Is this stat right here? Just looking at this chart, there's so much. The denominator has grown so much. When you analyze, that's why my dog's going crazy. Sorry, I've got lawn people here. But when you analyze, it's just math, right? If prices are denominated in dollars and there's more dollars, right, to keep the same ratio, the value ratio, the number on top has to go up too, right? That means there's just a higher floor in everything. Everything has a higher floor because of the expansion of the monetary supply. And I don't see any good reason for, the banks and Federal Reserve to really put a big clamp on that now. Now let's go look at altcoins. Let's see if we got any questions here. Start this. Let me try to get this app going here. I got some good comments I really want to highlight if I can. Get them up on the screen here. And it's not going to work. Okay. Well, then we'll move on. Guess I can let me just capture the whole stinking chat. Guys, we're just going to put the whole chat up. I'm just going to engineer a solution here. Let's see here. Is it? Did I do just a browser? No, it's what do I? It's the window capture. Window capture. Nope, it's not it either. Hold on. All right, I can't. I thought I had it. Is it because I already have it? I don't know. Let's remove that. Remove that. Add browser. Okay. All right, here we go. Got it finally. It's still not working. Whatever. All right, moving on. My application's messed up. I'm sorry for the background noise. All right. No comments after all. How do I get this out of here? Let's just take a look at comments. Okay, so in terms of sanctions, as you mentioned, but more importantly, nobody knows whether China will try to take advantage and move in on Taiwan. Yeah, well, that's another. Okay, so there's more. Nick. Yeah, so there's other things that can happen, right? There's going to be other downstream ramifications of all this. So we'll good point. That's a good point, T-Carp, about the potential invasion of Taiwan, which would really, upset the apple cart in technology and chips manufacturing, so forth and so on. All right, let's take a look here. Going back to the fundamentals on Bitcoin, right? We know there's a pretty tight supply right now, we've been seeing pretty strong buying around this $35,000 level, but the main level, now that we've lost this, I would say again, to me, if you want to count this as a bear market, the bear market started right there, and we got our dead cat bounce right here. Got a rejection. So, now we are looking at prolonged. And that's the thing too, is like I wouldn't be in a rush to try to buy just because we might be in a prolonged kind of downturn. But the other part of when I analyze just I wanted to pull up the longer term BLX chart. Let's go look at some altcoins, and then we're going to look at the long term chart, and I'll give you my thoughts on that. Okay. Going over to some altcoins, let's look at the Bitcoin chart here. They're all dying versus Bitcoin. Litecoin finally gave up the ghost. It's been rejected here now, so Litecoin is pretty much dead now. So what we were watching is Litecoin going to hold this? This was a really important level right here. This was like the lowest close, weekly close or daily close. I can't remember exactly, from the 2017 sell off on Litecoin versus Bitcoin before Litecoin had this huge move. And then we've had a couple of big kind of moves here in 2019, and then our whole bull market here, we've had a couple of, kind of compared to longer term history, pretty weak bounces versus Bitcoin. I think the reason for that is the market's seeing more or less what I've been saying for a long time, is that with Taproot and the Lightning Network, the use cases for Litecoin are few and far between. I can appreciate that Litecoin is one of the very few fair launch coins, proof of work coins, and on top of that, they just did an MWeb upgrade, so they have some privacy now. But in the grand scheme of things, their privacy versus more well-known privacy coins like Monero is really just not anything too terribly interesting about it. And then the other part of it is with Bitcoin, Taproot brings, you have the ability to do multi-signature transactions that, in theory, with some help from outside software, and different wallets, you could very easily do some real obfuscation of transactions. So it makes it really hard to track exactly where funds went if you kind of do it right. But as we just found out, these hackers recently even moved funds through the Monero network and it was able to be tracked. But when you move a large amount of funds, it's kind of easy to see these very large transactions and kind of stitch them together. Even if you do them batched and a bunch of smaller transactions, it's still kind of easy to aggregate that data and see this as a single entity moving coins through different protocols or different different networks. But if you do it on a small scale, you can pretty easily obfuscate some very small transactions, a couple of Bitcoin here and there. It's easy to obfuscate that and get a lot of privacy out of that. So the use case for Litecoin is fading, and the market pretty much has rejected here. Now, it can continue down and then break out still from a lower level. Obviously, it's been lower than this before, but this is not, if you're on the Litecoin train, this is not a good look. This rejection here of this kind of key level, we'll have to flip that red because it's been under it for a while. All right, retake that level, get back above this really strong downtrend, and then maybe have something to work with, but not looking good. All right, Ethereum. I've been wanting to add some Ethereum myself. With this uncertainty, I'm happy that I'm mostly in Bitcoin and have some fiat here to buy the dip whenever I'm ready to deploy it. But at this point in time, we're going to wait and see if with this upper half of the trend line, Ethereum versus Bitcoin ends up holding. I mean, this is not the worst place in the world to take a stab at maybe buying some. And pretty quick where you're wrong here. Basically, you get below this wick right here. So these levels, let's throw them on the chart. In my opinion, if you were to take a stab at trying to buy the dip here pretty soon, you're pretty wrong if you get below that wick right there because you've lost that midpoint trend line. And then this weekly level is, I guess, coming up right below here. So maybe not the best analysis because you do have some horizontal support, which might end up just changing the trajectory of these trend lines. So, use caution there. If you're rotating in and out of Ethereum, you're kind of on the edge here of holding, forming support, and then resuming up, and then just kind of maybe, because what could definitely happen. This is why I don't use trend lines for trading. Is because if you draw this out here, there's a world where somebody just does this, and you end up taking an entry and getting stopped out, take another entry, get stopped out, and it's just a not a good situation. So what you want to be doing is buying with momentum on the upside. So you're below the 200 now. So you really want to wait until you kind of regain some momentum here. We got too much downside momentum on a lot of these charts to really try to be too active, in my opinion. Now, if you're shorting, it's a different story. This particular chart is not one I would be trying to short either. There's other ones you could probably find that's just short here. Elrond versus Bitcoin. I made the mistake of buying over here when I thought it was starting to break to the upside. I think it was one of these support hits over here somewhere, maybe right there. Broken down below. Not great, but not terrible either. We'd always kind of thought it would come back to this bottom trend line at some point, and that's apparently what it's wanting to do. And you see this weekly horizontal support here. My expectation would be that we kind of continue to follow this up. There's too much happening on this particular project to be too concerned. If we do break down, I mean, I might look at actually trimming. Is that term? I can't help myself now that I hear myself say it. They've been making fun of me in Discord about being a trimming. I'm always talking about trimming. Yeah, I guess if we do break down here, I might. What I will do, how I'll trim this, is I'll simply move some of my e-gold into USDC on MyR and just park it in the e-gold USDC farm and just keep farming LK or MEX, with that. But that'll be what I do. I haven't taken action on this. Probably should have looked to take a little profit on this big move here, but did not. Was not looking at that at the time. Great. Cardano. We've been saying the Cardano USD chart. I've been thinking it's going to go to 40 cents, and here it goes. Yeah, so Cardano's probably next stop 40 cents. So you're going to see this downtrend likely continue for a while, which means if Cardano's going to 40 cents, you think about what the rest of the altcoins are going to do. Cardano's a pretty safe, fairly big, well, not safe, but large cap. And it's the one that I like long term. But again, Cardano, look at all this hype. People expecting too much from it right out the gates. This is why we sold into those spikes. But this breakdown is not unexpected by me. I've been expecting it to go to 40 cents here, and the reason for that is we got a pretty solid rejection of some, this failed bounce here. And you have really just nothing. It's just airspace. Now that you got below this level, this is the last little bit of support I think I saw in the chart. If you get below that, 40 cents is the next stop probably. So if Cardano's going to 40 cents, what's everything else going to? Multivac. You know, I was watching this area. I had added a little bit on this breakout. And this is a long-term hold, so I'm adding, like I'm just trying to build a position on these. So I bought on this breakout, you know, coming out of this dip here. I'll probably do the same thing. I'm just going to wait, and I'll add a little bit more on the next, you know, bounce off the bottom. So at this point, it looks like it, you know, it might hold here for all we know. If we get, you know, if we don't get China invading Taiwan or something. But this is the next set of level to watch, obviously, over here. And if you look, you had this, you know, prolonged on this particular chart. Price cuts through here, bounce off of whatever this 0.003, got below it for a really long time, bounced back above it. So you're going to want to see that hold way down there. Maybe the next opportunity, see if we get a bounce off of that level. VXV was one I was looking. I started to see a little bit of a hint of a breakout right there, and then boom, just got rejected. So this one's going probably back down quite a bit. No active positions on here for me, but beside the point. All right, let's look at comments. Sell-off leads to dovish Fed, which causes them to step in and print and drive the risk on assets up again in March. Thoughts of this idea? Yeah, it's exactly what I think is going to happen. All right, so you're going to see a dovish Fed. The markets, you know, you see a flight to dollar, a flight to safety. They're going to have every reason to blame inflation on on oil prices going up from the, you know, Russian invasion and everything else. And so this gives them a pretty big out and allows 12% real year-over-year inflation, 12 to 15%, which is what really is going on. Allows them to allow that to keep happening for the next several years, and allow this if you look into sell. So it takes you know a couple of years when money gets created at this pace like this. It takes a couple of years for this to make its way into the economy. Now remember, this is all debt driven too, but at some point this money makes its way into the economy, and then it devalues the value of that debt even, right? But it'll take about 4 years. So we really started printing you see that the chart was already going up pretty strongly, but in this area in here, this huge increase takes about 4, but you know, from what I've been hearing from really macro, you know, specialist people, that it takes about 4 years for this money to make its way to the economy. So what we're in this is like the first real full year. So we've had 1 full year of absorbing this huge move. So we've got about another 3 years of seeing inflation. Now, inflation should peak. You know, Lynn Alden was talking about this. Her expectation is inflation to peak this quarter and then to calm down. And many others are looking for a period of pretty strong deflation after this next period of inflation. So, you know, inflation for another 2-3 years, and then it'll calm down, and it might even flip in reverse and we might get some deflation as you know, again, the market cycles. The market does this. We just cycle and cycle and cycle. So we're in a larger, you know, there's like smaller cycles that follow these larger cycles. So, you know, analyze, you know, decide for yourself where we're at on that broader market cycle. But with the monetary base, I think a lot of people think that we're coming off of a big curve like this from a cycle perspective. I would say that we're actually probably coming off the bottom of one with all the money printing. So I would think we're actually probably somewhere over here. And the reason is, so the next downturn, a little bit of deflationary period, this is like a 100-year cycle. The reason is when you look at how the markets have reacted since Y2K against all the money printing. So if I go do, I'm just going to do this real fast. NQ divided by M2SL. If we do that, this gives you a picture of what the markets have done since the peak of 2000. So the markets are down. So the tech is down, even with this peak here. If you measure it based on the monetary base, right? This is the denominator in which all these assets are denominated in the U.S. dollar. The peak of 2020. So we've really, by true numbers, taking into account the real monetary base, we're actually down over the past 20 years, right? Now, obviously, you're up quite a bit from the bottom of that move, but we're not up as precipitously as I think people kind of would expect. If we go to the SPX divided by M2SL, this is an very interesting chart to me. This is the monthly chart. This is what markets have done for the past gajillion years. Let's see here, since 1960s, right? So what? That's 40, 50, 60 years. The past 60 years, we're actually still below this peak that we put in the 60s, and then we had a peak above this. The Y2K, the 2000 blow off top was way above this. The 2008 level brought us right back here when accounting for the monetary base. So when I look at and I talk about these cycles, you can kind of see this cyclical behavior, right? But you see it's a broader. There's a bigger there's bigger debt cycle bubbles in here, right? And then we're possibly coming to the end of some of the dominance of some of the fiat currencies in the world, namely the US dollar potentially. These sanctions could really put a big dent. But this is kind of what I see, right, when I analyze this. And I see us actually probably, right, after some period of, we're heading for a down period into the support of this this longer cycle. But that's kind of what I see. So another way of putting it is we're at a big inflection point, in my opinion, right? And I think the damage of all the damage they've done from 2008, go back to that M2SL chart. This is a really broad, right? So 2008, we're 2008 on this chart right here, right? So it was this kind of more gradual slope until 2008, and then since then it's been like off to the races. Right, so right through here, we had a big inflection change in how, the trajectory of this base of the monetary base increasing. Anyway, so that's going to have this is going to have long-term. This right here is going to eventually have long-term ramifications, and I think that's probably the weakening of the U.S. dollar as the reserve currency of the world is possibly what that might lead to. Okay, but back to comments here. Rates up in March, QE doesn't have to come right away. So you mean they'll increase rates in March, right? 0.25, maybe I think they were thinking 0.5 out the gate, but they may just go 0.25 now that we've had this risk-off event. But the other part of that is QE doesn't have to come right away. Do you mean QE taper or additional QE? Because right now they're already starting to taper a little bit, but I have to pull up some of Michael's charts on that. But QE has started to taper a little bit from what I can tell, but it's a big difference between QE slowing and QE stopping and quantitative tightening. So all three of those things are very different things. And right now we're in QE is slowing down, not stopping, as far as I can tell. Additional QE, probably in market bottom. Yeah. So it doesn't, yes, exactly. It doesn't have to come right away. I think in a very short term, my comments were more because of this acute risk event. This was what's been on the news for the past, several weeks. Now that this event has happened and it's no longer an unknown hanging over the markets are going to react. We're going to get a strong downside move. Then we'll start to put in a bottom, and unless there's another event, so I guess the Taiwan, if China invades Taiwan, would be like the next big one to watch. Unless that event were to occur, then we're looking at the market starting to normalize around this, and then we'll see if we get which direction it decides to go from there. If the Feds take a pretty soft stance on raising rates, and if QE doesn't if they continue QE but they don't stop it entirely, then you're looking at probably a bounce in the markets. But later this year, look at Philly's question. I was replying, sell-off leads to dovish Fed, which causes them to step in and print and drive risk assets up again in March. Thoughts of that idea? When you said that, I read that as dovish Fed. I didn't really stop and think about the causes them to step in and print and drive risk assets up again in March. Yeah, the step in and print part, I don't see them ramping up QE and or asset purchases unless the U.S. government gets drug into a military conflict. In that case, then yes, they might light up the money printer again to infuse the government with yet even more money. But we'll see how that plays out. As of right now, the rhetoric is that the U.S. and the U.K. are not going to be directly involved in this conflict. They're simply supporting the Ukrainians. So I'm curious to go see the news now, what's happening with the situation on the ground there. But looking at the markets, I would imagine again the biggest shock has already happened. What's interesting, if you look at kind of relative, notice this. I could divide BTC by the Nasdaq or the SPX, but obviously the equities markets put in a low, and then they've just smashed those lows here, and this move down in Nasdaq is really acute as well, right? So we've put in a lower low here pretty acutely, but Bitcoin, relatively speaking, is hanging on to a bit of a higher low as of right now. This would be really, really, relative strength. This is relative strength. Bitcoin is showing currently relative strength versus equities, but granted, it's not because Bitcoin is necessarily stronger at this moment in time. It's because Bitcoin had already sold off 50% ahead of, coming into this risk event. We were already down. I don't know when the Ukrainian stuff really started to pick up in the news, probably right around somewhere in here. But we had already sold off 50%, and what equities at that point were off 12%. So yeah, relative terms. So we do have currently it's showing relative strength in the last, say, month. But at a more macro level, the last quarter or two, Bitcoin is showing relative weakness versus equities. In my opinion, I watch this the separation from the 200-day moving average, looking for these bounces, and I can't help but notice the symmetry here. When you get too far into the 200-day moving average, it almost always goes back up to it before too long. But you see this symmetry here. We dropped below it, came back, not quite to it, trap move, put in a further bottom, and then made our way back to the 200-day, right? And then we got turbulence all around the 200-day, and then the market, the futures ETF news was what sent this flying back above there. But without that futures ETF news, who knows? We might have rolled back over to the bottom of this range here. Futures ETF news brought us up here, and then we eventually found our way back to the bottom of this range. Now, similar kind of story playing out. We've got a pretty acute preliminary selling and selling climax. Preliminary selling over here, selling climax over here. Bit of a trap, not quite to 200, and we're rolling over again. Perhaps we get this higher low bounce this time, put in our spring, and off we go. Of course, in summer, we put in that lower low, which is really kind of hard to figure out what was going on, but this would be called a swing pattern failure, I believe. So this is all the rage in the CTT Discord right now. Everybody's looking for these spring pattern failures to play out. Do you think Bitcoin will retest 19K? I do not. I think that is. I saw Heath put out. Let's just pull up Heath's tweet here. I'm not going to publicly come out on Twitter like I did before because I made Heath upset when I was kind of joking. I was joking around with him. I'm not serious. Heath is a better short-term trader than me. I'm more macro perspective. I have a kind of a longer-term view of things, and more. I'm using more fundamentals to kind of gauge my. It wasn't a live stream. He had the chart. Oh, where the heck is his chart? He talked about his. It must have been a live stream. He had his little 4-year cycle chart. So, it is my opinion that we are not going to have the same downside that prior bear markets had. Let's go look at the long-term chart. I almost need to get rid of all this scribbling I've got on this stupid thing. All right, let's go to the weekly view of my very long-term chart. You can see the cycles here. We've had this like potential, it's kind of metronome effect where we reach a peak and then we sell off. Now the capitulation event I think could take us as low as maybe 20,000. I wouldn't put that out of the question because this whole quote unquote cycle. What is this red thing here in my chart? This whole cycle has been pretty drastically different in the fact that we had this kind of really strong move shortly after the halving. So I think this was. Back here the halving wasn't well understood in 2016, and then so this supply shock really did its thing. The halving was not well understood in 2012. Now there was Bitcoin. Bitcoin in general just wasn't understood. This is all early adopters, and nobody pretty much understood what was going to happen with the halving exactly, and the Bitcoin market was still very nascent. Bitcoin was more well understood in 2016, but the effects of the halving and the supply cut on the market, most market participants didn't understand what was going to happen, cause a big spike. I think what happened here is because of this big spike and all the news this created a lot of excitement about this event right here, the halving, and thus what happened was people front ran that halving, right? And so the halving got priced in really, really, really fast, as opposed to letting the supply shock actually do its thing. I think this was front running a supply shock, right? And then you had a rollover, and then the second peak was on adoption metrics, right? This is purely adoption. This is a spot ETF approval, futures ETF, not spot ETF, but a futures ETF approval, which is really adoption centric, right? And so for me, this whole phase right here is what this is a change in the behavior, the behavior of Bitcoin. This whole, before, again, I did this tweet on it, but you know, it's pretty clear that before what we had is this constant move up, sell-offs, constant move up, never lost momentum until it's blow off top. Here, we had a pretty strong move up, stronger than even here. Like, we had moved a lot further in a shorter period of time when we kind of put in our spring top. And this was, again, the market kind of front-running the halving and the supply shock, the blow off top. And so those market participants got kind of smashed. And so this rolling kind of effect that we've had here, this sort of capitulation event that we've had, like 2016, I think everybody's looking for a big capitulation event. Because the top half of this didn't happen, I bet the bottom half of this doesn't happen either, right? And this is just my opinion, but I can see us going maybe very briefly to say 20K. Even that's a bit of a stretch, I would think. I really think 30K. How do I illustrate this better? So we never even made it. Like, if you think about it from a perspective of percent gain, let's just measure this. From here to this very bottom was a 339, so basically 400% gain, roughly 400% gain. Let's go 400% from here. So if you think about that, you see the market bottom of the bear market was 400% higher than the price of the last halving, right? But we traded way above this bear market low in the last halving with this huge move above that, way out extended further out past that. Let's go measure that, right? So that was 2,000%. Now let's measure our current market cycle. So from the halving event to the very tippy top was 700% gain. So instead of a 3,000% gain, we put in a 700% gain. So what I want you to think about was if the low of this market cycle, the sell-off, was right around 400%. If you look at where we're at right now today, right, 40. So, and diminishing returns is definitely going to be a factor here. So $30,000 is 270% price increase from the halving to $30,000. So if you just stop and think about that, last market cycle from the halving to the bear market bottom was 400%. In this market cycle, I'm saying that I think that the bottom is closer to, and we already put in kind of some lows here. This 1618 fib at $30,000 is a 264% gain. That is diminishing returns. That is also why I think it's far more likely that instead of this capitulation event that people were looking for, because if you think about it from this other perspective, from the halving to this price before we lost that level, that was an 800% gain, right? And then we collapsed down from 800%, 50% additional down to a 400% gain from halving to peak. All right. So right now, today, we're sitting at about 350% gain, right? So point of all this is the downside, I believe, is very limited. So what I would expect to happen was a bunch of people's piling in short side looking for this last capitulation event, only never to see it, just like the bulls never really got this top half of the trading range. They never got this in this cycle. That didn't happen. So we've been basically, if you think about percentage gain wise, let's go double check my numbers here. The very, 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 very peak was 700%. Let's go see where 700% puts us at the last on the last cycle. 700% right toward the top. Yeah, 700% is at the bottom of this move. 700%. There's 700% right there. All right. So in this market cycle, is another really good way of putting it that way, we've never left the top half of this. We've traded entirely in this range right here. So if I were to overlay the this, I'm going to steal this little squiggly line that I just did, right, that follows that. This is what we've done this market cycle. Is that right? So we can drag this out. Is this going to move on me? No, okay. I'm just going to draw a new one. You guys get the idea, right? So this is what we did this market cycle. More or less. I'm going to redraw it here. Maybe it was more pronounced, but whatever. You get the idea. I really think that this is going to be the bottom. And people who are looking for this capitulation event, like this was it right here. And this is it right here, right? This is this price action down here. We never got this. Why do people think that we're going to get, like we've been trading in that range. Percentage gain wise, I don't know how much more clear I can make this. I should put a tweet out on this now that I've done the math on this live, because I think this is, you know, pretty on point. Let me go to a clean chart. Let me go find my Sats USD. This one's got the full, I use this a lot because it's got the full history. I know there's other charts that have the full history of Bitcoin. Let's go to the log chart. Let's remove all this, remove these drawings, right? All right. So if I, yeah, so let's just measure, oh, I don't have the halvings on here, darn it. Yeah, we'll stick here. I hope you guys get the point. Let's go to comments. I hope this made sense. Does anybody have any you know dissenting opinion on this? But you know, I'm gonna have to do a tweet on this. I think this is kind of interesting now that I've put it this way. But yeah, this is exactly what we've done this market cycle, right? So looking for further downside, I think the floor from halving to the bear market floor, you know, clearly is closer to that. You know, this is, again, this was 400% gain. At this point in the market cycle, we've had a lower floor than even last cycle, which makes sense with diminishing returns. Our floor has been a 259% gain. So anyway, another way of saying I really just think that we are in the floor. We never got to blow off top. I don't think we get the capitulation because I think we've been trading exactly in this range the whole time anyway, right? So that is my expectation, that 30K is the floor. Hope that makes sense. And it's just a totally different change in behavior. Again, people did not understand. I don't think people understand I feel like I'm talking to a brick wall when I talk about this sometimes because I don't know if people are getting what I'm saying. But it's really very important to understand what market participants understand about the market, endogenous versus external events. I guess would be the easier way of saying it. Internal versus external events. If the market doesn't understand something, when that thing happens, it causes an overreaction to the other side, whatever it is, right? Uncertainty. We see that with the war, everything else, right? This uncertainty and unknowns drive price too far to one direction or the other. When it becomes a known, it becomes priced in sometimes too fast, and it becomes a sell the news event, more or less. Is it I can't even say that word. Exgenius? Is that how you say it? Exgenius events? It's called grayscale. It makes sense. Thanks. Okay. Thanks for the answer. Agree. Just getting a little nervous. Been in August since August 2017 the entire time, and the higher it goes, the more scared I get. Exogenous. Yeah, that's how do you say that word properly? Exogenous. I think I'm saying it wrong. Exogenous. Is it exogenous? I think it's exogenous. That's how you say it. Endogenous and exogenous. That's it. Golly, man, that was like actually melted my brain there for a minute. Okay. Yeah, so let's just go back to the charts. I do want to look at a couple of USD pairs, and then we're going to get off this stream here, and I'm going to go look at the actual news. I've got some other things I got to get to today too, so I need to go do that. But I did want to go live today with all this stuff going on here. Yeah, Ethereum's bouncing off of this 2,300 weekly support from way back over here. You know, my gut would tell me that. Well, we'll just watch. Let's just watch the bounce. What happens off of these moves, these horizontals? You're never going to be able to pick the bottom one, right? It's not possible to pick where the market's going to stop. But what we're looking for is what's the market reaction off of these levels. And a lot of times you get this higher time frame look at supports, and you can go zoom in on low time frame and get some good information. So it may just be that you play the range, right? So you hit a good support level, you play this bounce off of this support level, and you play from the bottom of this range, the top of this range, or the midpoint of this range, wherever you're looking at for a target. Like, for a small example, if you were trying to trade this, you could pretty easily just take a stab at buying here and selling, putting a stop below like these wick lows over here or something, and you just try to play that bounce. I think it's probably a lot. Yeah, look at the daily levels. I'm gonna let's see here. What did ETH from the launch point? How far are we up on ETH from the capitulation over there? We are up from a low. This other capitulation low. What's interesting is this news of the war hasn't created lower lows on much crypto. 2,000% up. See, I think you're 2,000% up from this low to this low. So expectations of it going up a lot more from here is probably not realistic. Probably better to expect maybe some consolidation, some sideways movement, play these ranges best we can. I'll run drop below this one level over here. I did buy some ALEF 0. Let's see how my ALEF is doing here. I don't have a chart for it. I had orders scaled in, so my orders on A0 finally was able to buy the dip on this. They've been waiting and waiting and waiting. So I scaled in between 90 cents. So what it is, I wanted to front run. I had a significant support at 88 cents and then another kind of bottom of that support range at 68 cents. So I've got orders scaled in from front running the 88 cents at 90 cents down to basically I think it's just 90 cents, 70 cents, and then or 75, 90 cents, 75 cents in the midpoint of the support range, and then 68 cents or so would be my bottom order. So I think I probably got one fill here. Yeah, I did. Got down to 82 cents. So my 70-something cent one never would have filled probably. But finally got some orders here on A0. So I'm trying to just scale into that position there. A0 is just it's a directed acyclic graph. So it's basically a poor man's avalanche or H-bar. So it's really the closest project I can compare it to is either Phantom or Hedera or IOTA. It is now the Avalanche I think has the best technology in the space, but Avalanche is also a $16 billion market cap, whereas A0, who has arguably, in my opinion, better technology than Hedera and Phantom, and where is IOTA? And IOTA. So if we look at the biggest one is Hedera. I would argue that A0 is probably actually at least on par with Hedera, if not actually slightly better technology with how they're doing their randomization of the DAG orchestration nodes. Not as compelling as Avalanche. Avalanche is more decentralized, much more interesting directed acyclic graph technology. But again, it's at least on par with Hedera, I would say, and it's a fraction of the market cap. It's $400 million market cap. It's only available in one single exchange right now. Just launched mainnet recently. Yeah, it's only available on MEXC. So yeah, it's just privacy features, multi-party computation, zero knowledge proofs this year. It's its own sovereign ecosystem. Blah blah blah. Yeah, it's a directed acyclic graph consensus. It's been peer reviewed. I looked at some of the peer review stuff. It looks good. I prefer Avalanche, but Avalanche being, vastly larger market cap. So the current market cap of A0 is 150 million. Fully diluted market cap 270 million. So just a lot of upside from here, right? So that this could easily be a multi-billion-dollar project when it's all said and done. So, and then MTV is the other one I started building a little position on. It's kind of speculative. I like A0 better, but MTV is only a $25 million market cap. And MTV came into my kind of key areas here. So these are my next two. I was big on. Remember, I was big on Cardano at 10 cents, Matic at 2 cents, VXV at this thing hit $25 at one point, 20 cents. So these are just my next micro cap plays: MTV, ALF 0. They're not really micro caps, but they're pretty small. I mean, MTV is only 25 million. MTV, I would say ALF0 is far more compelling on the technology side, and the potential is way bigger for A0 than MTV. But MTV has got a lot of potential at a $25 million market cap, so fully diluted market cap of 70 million. So those are my two. You know, I'm just building 1%. So they're both just going to be for now. I just got a kind of initial 1%. So 1% of my portfolio is split between these two currently. Split between the two, not even 1% of each. I will go probably. We'll see how the market shakes out. If we get a really big sell-off in alts, then I'll go up to 1% a piece on these next. To be buying a lot more because the value will have come down, right? Hey, can you guys hear the lawnmower? I'm sorry about that. You studied ALF0 and chess? Oh, is that a deep mind project? Yeah, sorry about the lawnmower, guys. It's like Thursday morning is when they come, so I forgot to clean the yard for them too. Darn it. Ah! No problem, man. All right, so that's it. Let's take a wrap here. I'm gonna wrap this up. I'll put together a thread and throw it on Twitter here. You know, kind of just what we talked about today. Kind of looking at that longer term chart. My reasons for saying that I don't think the bear market's going to be what people think it's going to be. And this is the same. To me, it makes so much sense. It's the same symmetry. You had, again, we've traded, if you look at the last market cycle, we've traded in this range. We never got the top. We've been in here the whole time, right? From having the price of the halving, the appreciation from having, we've been in this basic range the whole time. We never got all this. So the idea that we're going to get this capitulation that never even happened last cycle is also silly to me. I think this is a transition. This is a transition away from the market got ahead of the halving, knows what the halving is now, and this is a transition away from this sideways action we're seeing here is a transition away from boom bust market cycles based on supply and more focused on rooted in adoption. And I bet the next leg up that leads us out of here is not the halving, not the next halving. It's actually the spot futures ETF, and that I think will actually break this, potentially maybe break this trading range. It take us back to the top of the trading range for sure, right? Potentially break the top of the trading range, and then what very well might happen after that is that we forward price in the next halving, because again, remember the market tried to front run a potential blow off top for this halving, and then we got this consolidation as we put a lid on market price because of all that speculation in the market. But a spot ETF could take us out of this trading range, and then forward pricing in the next halving could be the thing so the 2020 halving over here, we might get a run up into the halving and a sell the news event at the halving. Kind of what I'm more or less expecting, and really just throw most people who are not paying really close attention way off, right? And that's yeah. So there you go. That's why I keep drawing it as 3, because I think it's going to be 1, 2, 3. Spot or futures ETF, one of those takes us out of this trading range. So maybe we get some price here, and then the futures spot ETF will take us out of this range, and then front running that next halving is and then we roll over. That's like the most likely outcome I see, because that's what most people are not expecting. This is what most people are expecting. All right, most people were expecting a blow off top somewhere over here. They were expecting price to be up way the heck up here, somewhere right around this area. So this is what the market was expecting, right? The market did not get what they're expecting. Now, what is the market expecting? Hell, people talking about the bear market. Now you've got people out here, good traders that just not thinking this through. I don't think all the way through, like all the macro ramifications of everything that's gone on the past couple of years. You got people expecting this, right? And then, and then off to the $1 million. This is what people expect, right? So this is expectation, and then here's my assumption about reality, right? So expectation versus reality. If the market expects this, something that looks about the opposite is probably more likely to happen. All right. Take care, everybody. That's a wrap for today. But we'll see on price action. I did say 35,000 was my target, and I need to go look at volume metrics. I'm gonna stay going live here just for a second because there's a bunch of things we need to look at. Let's look at the volume here on this bounce. We're getting a little bit of a bounce, right? Market's case, so this event is got it priced in. Let's go look at a short term by the hour. Sell off this morning, early morning. The bounce, reasonable volume. It's going to take us a few days for the data aggregators to aggregate this data to give us really good data. Let's go look at the Binance chart. That's going to give me the best. Where's Binance? Crypto. All right, let's look at the volume here real fast on Binance. Oh, yeah. So we had a big sell-off. Let's go down to the 4-hour here. Look at this buying volume, guys. That's a pretty promising bounce coming off 35K, actually. That's really promising. Look at that volume spike. That's what we've been waiting for right there, is a volume spike like that. You're getting a big buying volume spike. So a big sell spike, but this is good buying volume coming in from Binance, which is great because it's midday over here in the States. And let's go to the really short term. Let's go look at, well, I got Coinbase right here. Oh yeah, look at that buying volume coming in on Coinbase. My goodness. I guess it's not. I guess in perspective here, in the longer term, it's not that big of a spike. Binance looks a little bit bigger, but relatively speaking, it's a lot higher volume than we've had. And other than this move out of this breakout here, that's the biggest volume bar we've had on a 4-hour on this first bounce this morning since a long time on the buying side. It's a very long time. Over here is the bigger. Yeah, so that's really good news. Let's see if this volume profile keeps up. But yeah, the bounce might be on here off of 35K. So we'll just keep a close eye on that. Keep a close eye on that. That was my target the whole time. So, well, yeah, if we hit 35K and bounce. Maybe I should have bought the dip a little harder here, but better to be patient than to be sorry. All right, guys, take care, everybody. What do you think we'll see spot ETF? Grayscale's got a full court press on that right now, right? So I think Grayscale's going to get it first. They have with BYN Mellon on their side handling the ETF listing. Where's their little full court press? I retweeted it here. So they have this big thing to advocate for the SEC to convert GBTC to an ETF. SEC wants to hear from investors like you. So the SEC is taking comments on this right now. And there's a big full court press by Grayscale. Grayscale has all the credentials in the world, again, having hired BYN Mellon, which I think is a bigger deal than people realize. They are really, really well connected with the SEC and the New York Trust Company and a few other big players that are involved in the approval, New York Stock Exchange and so forth and so on, and getting these ETFs done. And they are as loaded politically as you can get to get this done. And so I really think Grayscale is going to be the first. And frankly, it's going to be a surprise announcement when it happens. It's not going to be there's like these deadline dates that they have. It's going to come out of nowhere. It's going to be one day you're going to see all these rumors of ETF, Grayscale, different exchanges moving something around because they're in preparation for Grayscale to be relisted as an ETF, right? And you're going to see all this background chatter, and all of a sudden it's going to be announced. It's going to happen, and then boom, price is off to the races. We're not going to get much of a chance to front run it, I don't think. There might be some rumors, and it's going to go. So. That's what's likely going to happen on this front. So as soon as the SEC, decides to approve it, it's going to come out of basically left field, and it's just going to be approved. And that could happen. Literally, it could happen any day now. I would expect April, May, something like that, as the more likely. Summertime, even. Who knows? We just don't know. The latest I think that they'll get this done is this fall, right? I think this fall will be the latest the spot ETF will be out. I do think it's going to surprise some people. Probably late spring, early summer is when I would guess that all of a sudden, boom, it's approved, and it's like, okay, well, I just caught everybody off guard. Saw the title, had to jump in. I have a coworker whose family is there right now at the very city. in Kyiv. Tell them to take care, stay safe. Sorry to hear about everybody. Again, all this market analysis, stuff that we just do, but at the end of the day, this stuff just isn't important anymore, right? It's the lives of the people impacted over there is what really matters, and the rest of this can take a back seat. Really, that's the other important thing. Analyze the markets, keep ourselves, sane, doing what we do, and managing our funds and everything. But the people of not only of Ukraine, I think that's why I keep trying to say everybody infected, because there are people going to war for Russia that they're more or less the whole just doing their jobs thing, but their families are impacted, right? So if you've got a son, a brother, a husband, a father, a mother, a wife, a daughter, that's off in the military, then that just everybody infected. They may not be taking up arms themselves, but they are just as impacted as or not just as, but they're also impacted as people who are living in the country that also have family that are at war, and then they themselves are also fearing for their own safety. So there's just a lot of people impacted on both sides, on all sides. And then you think about it's just general unrest. I don't know, I haven't heard from too many people, but people who live in neighboring countries to Ukraine are probably nervous about what this could mean, right? So there's just a lot of people impacted. So that's really what matters. All right, everybody, take care. If you have friends and family in that side of the world, whether they're in Ukraine or they have, direct, if you have friends and family who are affected by this, my heart goes out to you. But if they are also anybody out over there who's affected by the events going on, that's who we need to really be thinking about in these times. So, all right, everybody, take care. I'm gonna wrap up. And I played Dystopian Paradise. So the name of the song that we're playing today out of the Doge Wave playlist is normally I open with the song called In the 80s. It's a very 80s retro song. And then I close with Wireless because they're kind of both like technology. But for today, we're listening to a Dystopian Paradise.